You are.
Every morning at 8:45 Eastern, Option Omega's got your back. Troy's dreaming big like LeBron. Matt's backtesting like a daddy Mac. Dan's 30 years got our way, trading life and markets every day. Rusty's chained to the mines, digging deep day by day. But when Option Omega releases new features, he's free to come out and play. Option Omega, you're trading home, where every move makes you feel less alone.
Would you say that Option Omega is your trading home? I would.
Would you
Welcome,
say it has your
everybody.
back?
I would say Option Omega has your back every morning.
8:45.
Would you say that Rusty's
8:45.
chained to the mind, not mine, but whatever the AI slop said with it inserted the D.
Change to the mind is an interesting. That's probably a longer discussion.
That's
than
a
we have time on the
philosophical
show for.
conversation. Yeah.
Yeah.
Yeah. And all I
Yeah.
can say is, no, that's a very purposeful thing I said. And that's,
No,
Oh, you said that? That was your voice?
That was intentional.
so
Troy, I'm feeling very Mr. Rogers when you said, "We're your home." You know, I felt
Yeah.
like watching Mr. Rogers. It was like I was part of his home. I mean,
I think the day I made that song, I must have been losing a lot of money because I was like, you know, every move with these guys makes me feel less alone. Like that's a very sad thing
Wait
to
a minute,
say.
is that a bad day for you? I've known you for, I'll just say this, I've known you for a hot minute, Troy. And I think that's a good day or a bad day. For better or for worse, one of the things I love about you is you can have a melancholy streak where you're just kind of, you know, I just hear like "Hello Darkness, My Old Friend" just like on repeat sometimes.
Hello, Dark. Oh
Daddy
man,
Daddy gets sad a little bit. Daddy can get sad. It happens.
There we go.
So,
There we go.
yeah.
There we go.
But, Rusty did work with me for a brief period of time, and I do. Sometimes I'm down with the sickness. You know, if you put it that way.
My favorite story from that era, one of them, would be that. So we worked in a pretty small office, 30-something people, small team of developers at the time, and a few of us were in the same. We were in the same room, right? I mean, look, you know, I could not even throw a stone, like throw a paper clip in
3 feet, 3 feet
yeah.
from me.
And we'd be like, hey, let's just go to the grocery store. We just go together, just an excuse to get out of the office, drive in the car, chop it up. And Troy's like, no, I'm good. So the rest of us would go, and we walk around Kroger, and I see Troy, and he's come by himself in an antisocial way, and he's just like brooding and like staring over the aisles at us because he's that tall. You know, it was just, we're like, what are you doing here? He's like, I just wanted some alone time. Like,
in Kroger. That's the key. In Kroger.
Yeah, exactly.
Well,
it's not like we're at a monastery or something. You kind of expect this. It was just Kroger.
We'd go to Weigel's a lot, and here's the thing: smoking cigars, you look for opportunities. So when people say we're driving to Weigel's, say, "Cool, yeah, yeah." Do you need anything, Troy? No, I'm good. Immediately, as soon as they leave the building, follow them out, get in my car, smoke on the way to Weigel's. You know, I still want to hang out with the boys, but the ride part, you know,
is the experience.
You need your time. It's okay.
I do need my time.
Troy, you remind me when you said that, when Troy and I were visiting a few months back, Tom Sosnoff and Scott Sheridan in their new office. They're new. It's kind of a neat, you know, typical Chicago bungalow type neighborhood, bungalow building. And we go in there. They have a coffee shop, which is a unique name. Dirty Coffee or something like that. Wasn't it some crazy name? It's like
I think it's
Dirty
bad
Coffee.
coffee. I think it's bad coffee.
Bad Coffee inspired.
Dirty Coffee is a great name, though.
It is. It is. So we go in there and here's these 5. There was 6 people. You talk about an office space. There were no offices. They're like at tables. They're all together like you're sitting at a lunch table when you're in elementary school.
Yeah.
And they just got their computers up trading.
I told Dan, that setup was literally almost to the T how we had it at our previous company.
Oh, it is. It is like
yeah. Listen, speaking of working together, I hope we all worked together yesterday to drive the market down 110 points.
Hey.
Did you do your part?
Hey. Have you ever heard anybody talk about Thursdays on the OO show, Dan? Has this ever come up before? Has this ever come up before?
Please tell me more, Matt. I'm unaware of Thursdays.
Yeah.
I feel like they're a normal day.
We've never talked about it before.
Yeah.
We can't claim every day because we're talking about Wednesdays too. We got to pick just one day. We got to
No,
Thursdays or Wednesdays.
Dan,
it's our time. Troy.
Every time Dan and I are alone on the show, you know what the subject is? It's Thursdays. Whenever you're gone, we're talking about Thursdays.
That's right. The kids come out to play. Thursdays start flying
backtest.
around.
Yeah,
that's right.
Thursday.
The cats.
Well,
today, today could be. I'm starting to hear that sound right now. You ever hear it when it going into a 3-day weekend? And that's time decay just kind of starting to drop. If it stays like this, the CPI came out. Maybe Matt or Rusty or Troy could explain to me exactly what the numbers and what they're expecting, but it doesn't look like anything's going on.
Well,
2 points.
So this is
21 yesterday. So you would think that would just kind of nail it a bit. Matt, what do you think?
Well, I was just gonna say we've had futures were actually kind of in not a great spot. We were down 30 points from where we're at.
Okay.
So right now we're up more of a flat up just a tiny bit, but that was, if you look at it, that was all. Yeah, that was it started to rebound a little bit, but we're up 30 points off the bottom and looks like we're going to open close to unchanged.
Well, you know why?
Yeah, hit us with the news.
Inflation, right? Apparently it was it's solved, right?
It's solved. It's
mission accomplished aircraft carrier gift, right? Like we've done it.
Yes.
We've done it. So the news was simply that they were expecting, right, the forecast, right? I don't know what the poly market bets were, but 0.3% month over month, and it was 0.2 and 2.5% year over year, 2.4. So we're still not at the 2% rate. Their benchmark, and it's been how many years now that they've been trying?
Which is made up benchmark.
It is a made up benchmark, but at least listen. If you're gonna make up a benchmark, at least try to hit it. It's been,
I guess,
it's been since 2022.
Yeah.
Well, it's transitory.
Oh well, I forgot about that. I forgot about that part. I'm glad you mentioned that part.
Yes.
Max. Yeah, I totally spaced that. Yeah, man.
I'll tell you what's. I tell you what's not transitory is our friendship, and I love.
Wow! Where did that come from?
What is this transition? I'm waiting for it now. Where are we going, Troy?
No, I like making statements. Chat. Here's the thing. Good morning, Gregory. Hope you're doing well. Beautiful day. Knoxville, Tennessee's had some good weather this week.
Yeah,
it's been helpful. Talk about a little melancholy, sad Troy. The older I get, you give me some. Is it which one's the vitamin with sunshine?
Vitamin D.
D, isn't it?
Yeah. D's. Vitamin D's. They like that.
Don't say vitamin D's. It's just vitamin D.
Oh,
I know what
sorry.
you're doing.
So anyway, vitamin D, it feels like it. You just feel better. You feel better as a human just to get like sunshine in your life a little bit, and I'm thankful for that. So I had a great day trading because I'm a perma bear, and I don't get many days like yesterday, and I enjoyed it. And I want to talk about some discretionary things I did, and then move away from discretionary things I did. Is that okay? So I modeled out yesterday when we were down like 30. I tried a put diagonal, and I did a 0-1, and I did the 0 strike at 6,800, and the one strike, the one DTO strike at 67.95, so 5 wide. And that thing, it was really interesting.
Can you model this, bro?
Yeah, can you?
Yeah, Troy, come on.
Yeah,
Do we have a tool for this?
Yeah. What?
What
You're losing me in the.
Yeah.
Troy, what
Explain
vehicle
it.
did you do it in?
SPX.
Okay.
So, okay, let me do this real quick. Let me look at this real quick.
I mean,
And
short strike, I could tell you right away, you hit a bullseye. I mean,
well,
in terms of
so
the lows of the day and all that, right?
yeah, so let's look at it today and say basically like,
Yeah,
you
like
know,
a 0.3.
we'll do 67.75 because that maybe would be closer to where it was. And then now this isn't going to be the same because 4-day, the weekend,
Right.
you know, is going to have a lot more premium. But I did something like that. And I didn't pay that much. I paid $8 for it because the weekend premium's priced in here.
Oh,
So,
right.
but you get the idea of it. And so I thought it was interesting because it buys you time. And I thought it was interesting in that on a 0 day, if you're doing 0 day with that, when on that first initial move down, premium gets juiced. And so you're selling that rich premium for 0 day. It's still like a 20 delta at like with 4 hours left when you're down 80. Like that was the thing. That was my main kind of takeaway is like, if you're down 80 already and they're going to sell the 60 points below that, 70 points below that for $6, $5, go out further with the long because you'd really have to approach like a 140 point move down to be in any trouble. And you'd have to do that really quickly. Otherwise, that short is just absolutely bleeding because of the IV pump.
So you did this when we were down 30?
Well, I started putting them on when we were down 30. But basically, I put the last one on when we were down when it was like 68.60 at SPX. And they were selling the 6,800 strikes for like $5.
That's where you sold the 6,800, right?
Yeah, which was rich to me, considering the move already. You know,
so the deltas on this, you were leaning long deltas on this though.
No, well, you're leaning long deltas at the beginning.
Yeah,
a little bit. It was kind of neutral, honestly, but you're a little maybe long, but it's kind of buying you time. And what you want, and is honestly what it happened yesterday, which is like, as the day approaches, that short has burned off all that premium, so you're up, and now it's just kind of the long strike. You kind of have a long strike. It's not, you know, you still have risk, obviously, but like you have 60 points of room that long is just going to collect money all the way down because the short strike's dead, basically.
So did it blow up when you got near 6,800 towards the end of the day?
I took it off long before that. I had some stuff I had to do in the afternoon, so I had set like a pretty pretty lenient profit target, and it hit it like at 3:15 before we even went down that final.
Bring that bad boy. You still have that? Can you bring that bad boy back up for a second?
Bring that bad boy back up.
So I mean, when you look at a trade like this, the theta is interest. Like the time is interesting to me. I always spend my time looking at like how it can go wrong.
Yes.
But I think, Troy, when you're saying when you're trading something like this discretionary, I mean, the reason you do it is because there's a lot of time it can go right as well. Right?
I would never do this overnight. I would never do this. This was only a thing where it's like we're literally down 80 points and they're going to sell something to me that expires in 3 hours for $5. And I've got a long that's not that far away. I mean, honestly, it's just a one strike difference. So I'm basically bought a put calendar. You know, it's just a broken put calendar, one strike. And like they're giving me a lot of money for the 0 day.
And a lot of room and you got them right in the middle of we're starting to panic. And so you got, do you remember what was that 6,800 put, which was all extrinsic value when you did it? What did you get? What was that? Do you remember how much? I mean, what was the premium of the short put when you did it?
I don't remember the premium of the I think it was 400 or 500. I mean, like the cost of the structure was 800.
I got you.
So it was $8, and like that to me just felt cheap considering that like
absolutely
we just moved 80 points down.
Yeah,
and 6,800 is clear. Listen, I'll give you guys a little gamma edge trick here. Rusty taught me this. Just look at 6,800, 6,825, 6,850, 6,875.
Large gamma, at
Oh, gosh.
00. Second large gamma at 50.
So I just put it.
That'll be
coming
$599.99
soon.
per month.
Coming soon to OO. Yeah, Rusty Gamma.
So
It'll
I
just
just
be
put
my
it at
face just mumbling and saying the last two digits, and
I
you can
just put
trade
it
that.
on the rusty put wall, as I call it. I just did the rusty
It's
put
the
wall.
RPW. It's a custom indicator.
RPW, custom
That's right.
indicator.
We
Sorry, it's
bounced
not
off the
available
R-
in the back tester yet. We're working on it.
That's
Yeah.
right.
Bounced off the RPW.
Yep. And
Well,
so
So
There's
it's
a,
like
there's
a
an
bearish
upper
scale?
there's an upper resistance at
Yeah.
50 points up. Imagine that.
Well, like a bearish scale. I mean, and kind of it made me think of when you were talking with Rob and Marie from Daytona Beach.
yep.
And Rob,
Shout out Rob Marin.
yeah, one of his statements was, I just try to take, it's like Warren Buffett, right? He said, when does he like to buy? When people are panicking, he's like, come to my office, whatever, you're panicking. And Rob is saying, yes, I like it when they're, because didn't he say when you guys were going to dinner that night, before that, the market was tanking and he had all these orders in to sell puts. So I picture you yesterday, Troy. It's like you're sitting there and saying, okay, market, you're starting to, didn't panic yet. It was only, SPX was only down 30 when you did it.
The first tranche. I did a couple tranches.
What got you excited that this could be a little woof? I mean, because no one knew it was going to be that woof.
Well, so here's the thing. I don't want to get too far into like my discretionary mindset because I could miss it. But at least yesterday it worked. And so my thought is we just came back into range a couple days ago, right? We approached the top of the range,
right?
Which is the 60, approaching 67 or 7,000.
Yeah.
And we dropped back out of range. So like, I don't assume we're going to just immediately bounce back up. So it's just a quick play. It was a quick play, and it gave me some ideas for backtesting, which is the most important part.
Yeah.
And the most important part was maybe when we're having a vol event, and I would argue yesterday's a vol event. I think we're up 16% in VIX. That's a vol event.
Yeah.
If they're going to give you something 60 points away for $5, and you have long protection, one strike differential for the next day, and a total of like $7, like take some shots if you want to take some shots, and like it worked out to me because your risk truly is to the upside at that point.
Absolutely.
Your risk is not to the downside.
Absolutely. Yeah.
So anyway,
I think it's a great, but when you say, I mean, just one last thing, I don't mean to beat the horse here, but like you're saying, you're looking at the range, you're looking at the range or market. Did you look at market profile at all a little bit?
It informed it.
But you were looking basically for it to go to lower end of the range, right?
60, yeah, exactly.
I mean, it's just looking, I think it's wonderful. I mean,
and also this is the way I kind of play those calendars anyway. If I'm doing a discretionary put calendar, I'm fine if it goes against me that day because I'll just like transfer it into like a put spread or something, a long put spread once the short expires. So there's things you can do with them. But anyway, I digress. Here's the thing. We talked about Microsoft Wednesday, Thursday. We talked about today. Are my boys hungry for a back test?
Yeah.
Am I hungry, boys?
Developers.
Do my hungry boys want Daddy to cook?
How have we not played the developers clip?
For copyright purposes.
I can reenact it.
Please do.
Well, that won't be today. Let's just say, if anybody doesn't know what we're talking about, Microsoft, everybody thinks of Bill Gates. He's the most famous person in Microsoft's history. Second most famous person.
And when you think of Bill Gates, what do you think of?
Oh, man. That's a whole nother podcast. See, if you haven't noticed, I'll just tell you, whenever there's a topic that can go a lot of different controversial directions, we make one of two choices. We either just wade in and start firing off, or we say, that's a whole nother podcast. So that's a whole nother podcast. The second most famous person in Microsoft history is a guy named Steve Ballmer, currently owner of the Clippers.
Much more interesting character.
A huge NBA cheat, allegedly, from Pablo Torre, not from my mouth, allegedly, and a very influential guy. And he took the reins at Microsoft for many years, and probably during the time that Troy is going to show you this back test that he's pulling up right now.
Most famous for
So-
the Zune phone.
The Zune. Well, okay, so we actually had a Zune that wasn't a phone, and it was fantastic.
As an MP3 player only.
It was it wasn't. It was an MP4 video player as well. It was like it was like an iPod alternative that you didn't have to use Apple's ecosystem. And then it lasted like 2 months and it broke. And I tried to resolder it. It's a whole story. It didn't work anymore. But for 2 months, it was great. Troy, what's your back test?
Well, first off, I put that on there. Romeo digs deep sometimes for some facts, and I'm very appreciative of that. Romeo, I did a bit of looking every day since 2013 where SPX dropped 1 to 2% and VIX started below 18. Yesterday's 18% VIX reaction ranks 3rd out of 96. Only 2 days had a bigger VIX pop off.
Wow.
So it was a vol event yesterday, which I mean, again, to the point, they were offering you, the market, the auction was offering you some interesting prices for the day. So, all right, here we go. Shout out Romeo for that. Thank you. Daddy's been cooking. And I'm going to give you guys this trade right here. Nope. That's the same trade, literally the same trade I just showed you. I'm going to give you this trade right here. Okay. What are we looking at, fellas?
Okay. This is
So this is similar to what. So we talked about this
Talked about it
on
Wednesday, that's right.
Wednesday,
Yeah.
and it looks like some improvements have been made.
Yes.
Daddy's been cooking. I see.
Daddy's been cooking.
So we had no exits on it originally. Remember, we just like that was not rehearsed. So we just sort of threw that thing out there. We basically copied your basic structure.
It's called the YOLO.
So it looks like you brought the call deltas up to 25 from 20.
Yep.
You put up interesting. The profit target thing is interesting to me. So you're limited. You're limited on your upside, but it keeps your days in trade. If you look at that, only 8 days in.
Yeah,
right? So
because you're putting it on every day, right?
Oh, it's on every day rather than just
multiple times a day.
It's an MEDC.
So what's interesting about this is it's probably not trading a lot before recent memory because you're not having 14 and 28. But you have exact DT off. Okay, so you did a bunch of stuff on this one. So this is slapping on. Oh my gosh, 1,100 trades. No wonder.
Yeah.
Okay.
Yeah, you got a lot of.
You've got a lot going
of
on here.
occurrences.
Okay, you're blowing my mind. This has changed drastically.
It's
And
the
as
old
always,
MEDC.
if you're new to OO, if you're new to the show, options of all risk are not suitable for all investors. This is for entertainment purposes only.
Ooh.
It's not talking about good strategy or bad strategy. We're just showing you a back test that's interesting. So, first thing I like about it, 1,100 occurrences is a lot of occurrences.
Yeah.
That's a good data set to work with. Now, why are you doing that? Because you put it on 3 times every day.
Right.
So I would never do this. I want to start out by that. I would never put 9% of my capital on one trade every day. 9 times 5 is like 1,000. I don't know math really well, but and then so you don't need to do that, and you shouldn't do that. But the idea is what we're talking about.
Yeah.
So you're taking a profit target 20%. Obviously, require 2 prices, all that good stuff. The good stuff that keeps a test safe. The put and the call can go in the money, right?
But not far. Not too far.
But not too far. And probably most important on this test is when the short-long ratio goes down 50%. So we have no entry criteria on the short-long ratio. We only have exit criteria on the short-long ratio. So doing some research, it seems to me that short-long, a lot of these instances start in the 0.4 to 0.6 short-long ratio. So what that shows me, at least Microsoft Premium's pretty juiced. You know, SPX, SPY, there's QQQ. You're certainly not starting with a 0.5 short-long ratio. normally. So as we get into equity land a little bit, that's an interesting note for those who are backtesting Microsoft. Do your own research, but short-long ratio, you get more juice on the shorts on these equities.
That's a super interesting note, Troy. And something else is interesting is, I mean, getting rid of it totally just pumps up your occurrences. It totally pumps up how many times this bad boy can go on.
Now there's some sequencing risk there too, right? So if you're
of course
slapping this on 3 times a day, every day, and you get a bunch of them lining up because they're still lasting 8 days, and then you get a massive down move, that I just want to say there's going to be some significant risk where they all get stopped out in one giant herd.
I want to
like that T-Rex coming over the hill where it eats all the little guys.
You shouldn't do this. Don't trade this. It's just an idea. I'm showing you an idea where there's a lot of occurrences. Like 300-400 is like a good data set for DCs. We're showing you this like a lot of times, and I will say this: these times are not optimized. This test is not optimized. I obviously worked on it.
Yeah,
but I did not optimize any parameter on here. I didn't optimize 5 and 4. I'm literally just lazily looking at things that have worked in the past for different structures and putting that on there. So,
can I make?
Please, Dan.
No, I was going to make a statement here. I'm getting pretty excited about Microsoft for calendars, but for a couple of reasons. As Troy was talking, I looked at a price chart, a 2-year price chart. If you compare SPX and Microsoft, they're almost identical, except if you take out the last 2-3 months, Microsoft's had kind of a bad hair day the last 3 months.
We'll show that.
Right? It's kind of,
we'll show that.
Yeah. Yeah. But here's the kicker. I remember, I don't mean to just to get in the daily in the pits, but when I was in the pits trading IBM, Microsoft could be, if you said, what stock would you trade that would give you more the SPX double calendar or calendar fuzzy wuzzies? I would say be Microsoft, because you want something that's relatively stable, which Microsoft is, but it's got a little more juice. The implied volatilities now are around 30 to 32. So it's not an NVIDIA or Tesla crazy volatility. And I think it would be a candidate that would work really well with the double calendars and the calendars. You're going to have tremendous liquidity, kind of range bound like SPX, but a little more juice. It's almost like the relationship between Russell and SPX. Russell's always going to be 20% more volatility. So I really like this one. And I think it's because, like an IBM, what I was going to say real quick, when I was in IBM, I was trading in the pits for 3 years, 4 years. The play was basically, it's a 20 implied volatility, 22 implied volatility, phenomenal liquidity. It didn't move. You just put on a bunch of calendars, and because it's not moving. You just put on a bunch of calendars. It moves up a little bit.
Yeah.
Okay, we'll add some there. Have a double calendar. Moves up a little bit. If it slowly moves up, and you've got this big thing in, and this is before you had expirations every week. So, but when it came to expiration, this thing would just die, and you could, it was it's a good strategy and range bound type stuff. And I think the problem is a lot of people are, I want NVIDIA, I want Tesla, I want the crazy one. Well, I want a little bit of premium, but give me stability. Give me something that, in Microsoft overall. Now, again, the last 3 months haven't been good. But anyway, that didn't mean I was just thinking out loud.
I like it. That makes a lot of sense. Yeah, I think I would love to continue, Dan, to that point, finding, other tickers that have a little more juice than SPX, because there are times when SPX itself is just kind of in a holding pattern and there's not a lot of juice and you're not getting much risk reward. It's not good. So is there, what I'd like to find, to your point, is like, can I look elsewhere? I don't want to necessarily trade it on a crazy meme stock.
Yeah.
But what else do we got that's like highly liquid and has a little more juice? I like that idea a lot.
Yeah.
Well, and I will say this, do your own research and we'll figure this out as we go, but I wouldn't have this particular trade on anywhere near earnings. Definitely the day the earnings date comes out. To the point of year to date, you had a massive move on earnings. Well, that wouldn't have helped you. But then also because it was such a massive move, it's probably going to screw up vol in this type of structure for a minute. So I would say even like this is where you have to get a little bit like in general, I would say don't put this trade on if there was just a 10% down move on a stock, 15% down move on a stock. You know, that'd be my. In the same vein, I mean, it makes sense if SPX went down 10% in a day, you probably don't want to enter new double calendars. Now, sometimes there's weird things that happen, but I've traded enough DCs, and we all have, where we have the days during the craziness where like, well, we made 150% on our double calendar. And then the next 2 weeks, you're like, and it's dead, and they're gone. So,
well, that's why what's great is what I look forward to with the back testing with these stocks as Rusty brings them out is you can test the earnings, right? And you might see, I mean, I've historically stayed away from calendars or mixed month trades as you get into earnings because it's just a volatility destruction. But I've seen people do some of these double calendars and the shorts will come down sometimes more than the longs, and it could work.
Yeah.
But that's where the testing, you could just test it. That would be one extra step you have to do versus an SPX is you just have to test every earnings and see, hey, maybe this one works for earnings with mixed month spreads, and this one is horrible.
Makes me wonder, Dan, if let's say earnings is 2 weeks out or a week and a half because you're doing this on a Friday. Right. And I'm assuming earnings is midweek or whatever. I don't know exactly when Microsoft's earnings are, but would it make sense to do it 2 weeks out? And because, maybe hopefully you get some juice squeeze before earnings or something happens,
that's right,
but not a week out. Like that's that kind of artistic approach, or not the day of or the 2 days before or whatever. But you could back test that though. It takes some work.
You could you could back.
Yeah.
Well, shout out Steven. I mean, we put in, he said, enter when the short long is greater than 0.6, cuts the max loser a bit. Certainly does.
There it is.
Certainly does. And so to the point, I mean, this was not optimized. And so like, I'm really encouraged that like we found something with 1,100 things with that good a performance.
Yeah.
And that shows me like, oh, we can make that a lot better.
Yeah. Your win rate's up, your capture rate's up, your max loser's now smaller than your max winner. Yeah.
And think how crazy this is without, we just started 2 weeks ago getting 3 times a week expirations in Microsoft.
Oh, listen.
So now, I mean, this is going to explode in terms of trades.
Once I
look at Troy's dreaming. He's back in his chair.
He's back in.
So I've been forward testing some specific structures with that in mind. And it's, again, I haven't been able to look at data, so it might be terrible, but like the more data set we get, the larger data set we'll get, the better it'll get. But like I have some specific things I'm doing on some of these type of structures and like 2-4 setups, but I'm doing like double diagonals and like it's just printing. And I'm not saying do it, but I'm just saying so far the forward testing has been like really encouraging of like you can get 10%, 20% in a couple of hours a lot of times on these 2-4 structures if you diagonalize them a little bit.
Wow.
I know diagonalizing is a dangerous game, so I don't want to speak too much to it until we double. But honestly, diagonal is a dangerous game depending on the width. I do want to say that because I've been I mean, look, just real talk here for a second amongst friends. Like we love DCs. We're all in on DCs. We're team DC. You can get wrecked on a DC.
Right. If
it goes 50 points against you.
Right away.
Yeah. It's the same feeling as a double diagonal. So there's things to do, it's about the width of the double diagonal as far as risk, Dan, I would say, more than anything else, Yeah.
And I think one last thing, I didn't have anything on yesterday, but there were a few people that I knew had on reverse iron condors and just talking about the good, the bad, and the ugly, as Clint Eastwood would say. So yesterday coming into the morning, people who had Friday Ricks on because they thought there could be some catalysts Thursday or Friday or whatever. So they had Friday expiration Ricks on Friday expiration. So maybe they were buying like the 32 Delta call and put 20 wide. So it was maybe $10 or $11. But coming into yesterday morning, they were down like 30% on those things. So it was like sucking wind, but you had till Friday. And then all of a sudden, an hour later, like when all that happened, Troy, they went from 30% down. They took off the put side at like 30% up on the whole trade. And now you just have the call side for a free one. But it's like, that's where you need the back testing, because if you didn't, how many people could stay in that? I'm down 30% or down 40%. You're sweating.
Yeah.
You're sweating, and but again, you put it the purpose. You put it on for Friday, but the move happened Thursday, right?
Yeah.
And interesting.
Yeah, I mean, we'll see. The other thing I'll say real quick, and again, not to like talk my book, as they say, but like, I was looking at ES last night, like, and I'll look this morning, but like, we were at 7,000 in ES like 2 days ago.
Yeah.
And they're selling you the 7,000 ES strike like 7 days out for like $300. Like, that feels to me like mispriced. Now, I don't know anything, and obviously like the perfect thing, but like the fact that they're going to give you something that we clearly keep testing for that cheap, that far out. I took some shots. I did some stuff. I put some stuff on, and I'm a perma bear.
Would you like an upside butterfly? What do you think about that, rather than just going?
I did something weird that I don't want to talk about publicly, but I'll just say it publicly.
There's some shame involved.
No, I'm trying some new things out and stuff that's going against my better judgment. But like, I'm trying call calendars, and I have some specific things I want to test with that. So I don't think that's the best way to do it, but I'm doing call calendars. That's basically.
But just one question on that, not getting into strategy, but when you said the 7,000, were you saying you were selling the 7,000 or buying the 7,000?
Well, with the calendar, both, but like buy.
Oh, you were calendar.
Buying it basically. I mean, net long.
Calendar 7.
Net long delta.
So that would be a bullish calendar, but you had something on the other end.
I've got some other things on the other end. Yeah.
You got some stuff. Yeah. So kind of a double structure.
Yeah.
It'd be fair to say.
Yeah.
Okay.
So listen, it's Friday, and you know what it means on Friday. I'm going to go ahead and say it. I don't think it's true at this point, but I'll just put it out there. Obviously, we're going to bomb Iran.
Oh my gosh! Again,
is this every week now?
It is a 3. Here's the thing. You know this. I'll just say this. It's a 3-day weekend. So remember, everybody in Option Omega, before you make a post and help questions, backtesting / automation. Why didn't my trade go on? Monday's a holiday. If you didn't know that, Monday's a holiday. Here's the point for what Troy's saying. Trump has shown a propensity that he does kind of pay attention to the market. He likes the market to be able to digest things. There is an extra weekend for the market to be closed on Monday. Troy?
Yes. Real question before we go. I want this to actually be a helpful show. And you guys can answer this better than I can. Robin Maria says, what are the pros and cons of limiting a test to only one contract per trade?
We need a whole show on this next week.
I know, but just give them.
Well, listen, here's what I would say. Okay. When you do a percentage base, this is good because you can use metrics like MAR. You can look at compound growth. You can see
recency.
You can see your metrics every year, right? So then you can look at that graph of if you're doing a 10-year back test, you can see every year what the return would be because it's compound, right? As soon as you limit it to one contract, those metrics are useless. But what's more useful is that, let's say your capture rate, which on a debit trade is pretty much just your return on capital, right? Because you don't have a margin requirement other than the debit. And so when you do a one lot, then you can go back through time and see like, oh, what sort of, without being recency biased, what was my return on capital this whole time, right? And then you would use a linear graph rather than a log graph to look at that, and then you could kind of get a good indication of how it's done without being too biased for like the last 90 days. Now, some people want to be biased. They want to follow the trend. So that kind of thing makes no sense. But if you're someone who wants to look at the last 10 years and really kind of understand where this would work and where it wouldn't, and you can kind of see, oh, look, in high volatility times it did poorly. Maybe I'd add a filter for that. Maybe this is a thing you do when it's range bound. Like, it kind of gets you thinking in a different way using that linear graph with a one lot. Another way to do it is you just cap the allocation. So you say, I would always put $10,000 on it, and then it would kind of show you kind of through time, like how this would do.
Too much linear talk, too much, the words are too big.
What's happening? What just happened? I'm so confused.
I don't know if that worked.
Was that your way of saying nerd?
Could you guys hear music?
No,
yes,
of course not.
We could all hear the music.
Okay,
Yes,
sweet. All right, good. That's good to know for the future. So,
Right.
listen,
Perfect.
boys.
Unlocked that.
No, I love linears. I love logarithmic.
No, you don't. Don't lie to us.
Listen, I'm trying to get. I mean, and Matt and Rusty know this. I'm trying to get invited to an allocators dinner on a yacht
What?
in the next month, and if I can do that somehow, the amount of stuff that I'll be talking about is incredible. So I'm trying to weasel my way into a yacht dinner for allocators. I'll let you
It's
know
an
more about that.
allocator.
What's
Yeah.
an allocator?
Is it like an alligator?
alligator.
It sounds close. Is it in Florida? Like, I'm confused.
Morally,
Yeah.
yes. Yes. So
That's the right answer.
on that note, boys, have a great
Hold on, you
trading
gotta tell
day.
us what an allocator is. First of all, what are you
know.
allocating? You can't skip that question.
That's
I know.
what people who run funds call themselves a lot of times amongst friends. They're like,
Interesting.
yeah. So anyway, all right. Listen, may the market move today if you need it to move, and may it be unchanged if you need it to be unchanged. And that's the dichotomy of trading. So have a great trading day, and we will see you guys at 11. Dan, the show continues at 11. We got some things to talk about.
We're still dabbling with, as they say from Chicago, the wheel.
That's right. And I don't think the cavemen, I don't think they started. I mean, I think it probably took them a couple days to figure the whole wheel thing out, and it's going to take us a while. So we'll get there.
Yeah.
All right, guys. Have a great trading day. We'll see you Tuesday. No show Monday.
Listen, everybody, seriously, go touch some grass. Have a great weekend.
That's right.
Enjoy it.
I don't want to touch it.
Sunshine,
I wanna walk
vitamin
on
D.
it.